what really worked, what didn't work, and why. We have $12,000 in profit in these last 30 days from June the 11th to July 10th, 2025, of course. And here we have a breakdown of the strategies. We have 10 trading agents, AI trading agents that are trading alone. I am not trading alongside them manually. They are trading automatically. But I am configuring everything. And we have the trading blog. So you can go to translatestocks.com/trading, or if you are on our website here, translatestocks.com, you can just go to the blog menu, and you have, this is the price on rails blog, and we have the trading blog here button, the first button, and we have day by day what happened with the results, and here the total profit or loss of the entire period. So we have all the screenshots and all the descriptions of all days, day by day here. But I will walk with you guys now what happened, why we have these results here. First, let me remove my face here. Okay. First, we have 10 AI trading agents running. This is the platform. Okay, so I have three of the agents, the three charts here being shown, but we have 10 of them running here. If we click the white charts, we can open the chart of that agent. So we have like 10 independent trading agents. Each one of them is running with a different strategy, with a different contract. All of them are trading futures contracts. Even this BTC USD, the Bitcoin chart, it's running under the Bitcoin chart, but it's sending orders to the MBT, to the micro Bitcoin CME futures. It's not trading the Bitcoin itself, it's trading the futures. I summarized 30 days here, and we have from this 10 trading agents, we have these categories here. First, the averaging down strategies, what I call the brute force attack. Why brute force attack? Because we start with one contract and then we increase the position if the trade is not going to take profit. We have another entry, and then we allow the agent to create an averaging down entry. Up to 4 times in the linear mode for agents 2 and 3, and up to 3 times in the martingale mode for agents number 1. Agent number 1 and agent number 3 are trading with the micro Nasdaq MNQ. Agent number 2 is trading with the micro S&P MES contract. Okay, and as you can see, they in this last 30 days they are doing very well, like $4,000 each, with like everything happening differently during the day. Both three strategies delivered the same result, and basically the final result that we have here, $12,000, is the sum of these agents here: 12,300 for the brute force attack, and 12,500 to the total of everything in these 30 days. But we go up to 5 contracts, agents number 2 and 3, or 10 contracts if they are trading all together, and up to 8 contracts to agent number 1 because of the martingale is 11248, trading the micro Nasdaq. So we have 10, 18 contracts altogether. They can open until 18 contracts altogether to have this result. Agent number 4 is the Bitcoin futures. It was very, very good until a few days ago, like 4 or 5 days ago. We are trading on futures, so we are doing day trade the same way, like 23 hours per day. The cutoff hour is like 4:58 p.m. Eastern time. And we are not trading Saturdays. We are not trading when the CME is closed, okay? And we were trading with a very good profit until 1 week ago. And these last days, when the Bitcoin went from 100 to $116,000, they had like a drawdown. But the strategy is good overall. Since we started with this strategy, we have only 30 days of the trading blog, and I'm showing the period of this 30 days, but we started with this strategy. Before that, we are with $1,000 in a profit in something like 45 days. So it's in a profit yet, but it's very volatile. So we are, as I write every day in the blog, we are testing this strategy yet. And like the next step that we have here is to use the convex trading for the Bitcoin, the same thing. So the convex trade is the reverse trading for the brute force attack that we are using with the Bitcoin futures as well. Um, Agents 5 and 10, they are trading with the minis, not the micros. One mini Nasdaq for the agent number 5, one mini S&P, one ES for agent number 10. So one NQ for agent number 5, one ES for agent number 10. This strategy was very, very good until last month, like February, March, April. Until last month, it was very good. Last month, something happened to the market that this strategy started to going south. So overall, both agents together minus 1,700. What we can do here is substitute these agents for other agents the same way we did during the course of our trade with the agent 6789. So, and closing the explanation here, agents 6 and 7 is the convex trading, the same way we have with options when you trade the convex trade, which means the reversed averaging down. You have a very small stop loss and a huge take profit. In this case here, we have two micros ES, 6 and 8, and two micros Nasdaq and Q, 7 and 9. So one micro each one micro ES, one micro NQ, one micro ES, one micro NQ. And what's happening here is that agents 6 and 7 are using the average SMA 20 and the Bollinger Bands to trade, to start the trade and to exit the trade. And agents 8 and 9 are not using the average, only the bands, only the Bollinger Bands to standard deviations. The difference here is very, very, very big. Agent number 9 and agent number 7 both are trading with the MNQ. And there is a huge bias for the average trading, the convex trading with average trading, the micro Nasdaq. Okay, like $2,000 for the micro Nasdaq with the average, the Bollinger Bands with the average, and basically nothing to the one trading with the bands without average. And when we go to the MES, the micro S&P, agents 6 and 8, the results are similar. Okay, like the convex with the bands only $600, the convex with bands and average 333. We have here only for the convex trade $3,000. Okay, and this is new configuration. The very, very strategic usage of the convex trade is because it's the reverse trading of the averaging down. The day we have a loss on the averaging down, usually we have a very good profit on the convex trading. But the convex trading is not the winning rate strategy. Like we are not making 70% of winning rate. Like it's trading with more losses than profits. But when we have a profit, it's a huge profit. So both together, 1, 2, 3, and 6, 7, and 9, both together will make our money, like our margin usage during the month, okay, smarter. And we are using less margin if we combine these strategies. Agents 5 and 10, I am for sure I'm going to change stuff here, or the quantity, or I'm going to change this for the Bitcoin convex trading, or something I will change for the agents up 5 and 10. I like the after loss strategy, the reverse martingale, as I call it, because it trades only after one loss. You go to the maximum quantity after one loss, and then you decrease the quantity to 0, and then you keep it 0. But of course, we depend on results, and the goal here, the main goal here is to make money and to have some strategies that can trade for a long time.